Hello, everyone. My guest today is Ben Lilienthal. He's a serial entrepreneur in the collaboration space. He started 4 companies, sold 2 to public companies, and ScreenMeet, his current company, is number 4. He's a proven leader and innovator, Amherst College BA, and Crown Fellow at the Aspen Institute. All right, Ben, you ready to take us to the top?
Sure. Fire away, Nathan.
All right, what is ScreenMeet, and how do you guys make money?
Sure. ScreenMeet is enterprise remote support in the cloud. So if you think of existing remote support applications, which is basically when the IT help desk or the call center comes in to take over your computer, they're all desktop to desktop based. ScreenMeet is the first enterprise SaaS solution to be developed cloud native, which means it's faster, cheaper, better than things like LogMeIn, Bomgar, GoToAssist, WebEx, Skype, Zoom for the remote support use case.
Are you selling directly to the operator of the call center or the companies that put their calls through the call center?
We sell to the companies that hire the outsourced service provider call centers. The verticals that we sell into are mainly subsets of high tech. So hardware like PC and phone manufacturers, software like other SaaS companies, and then finally, sort of random sort of verticals within education, manufacturing, and obviously the IT help desk, goes across lots and lots and lots of traditional industries.
And help us understand briefly kind of how you price. So the average customer pays you, about what per month to access the technology?
Anywhere from 20 to $60 per user per month.
And what's at a logo instead of a seat base, at a logo basis? Are you typically serving small teams of 5 people or enterprise teams of 500?
Well, the beauty of SaaS and the beauty of startups is you build the software, and to sell one license is as much work as selling 10,000 licenses.
Not always. With the sales motion, it can be very different. One's a no-touch free play, and another has a whole system.
Yes, but from the back end perspective,
of course.
So what we did is we started by selling a couple seats here and a couple seats there. And then we landed a big customer in OpenTable, which was a couple hundred seats. So we felt like we were pretty cool. And then we recently deployed the largest technical services organization on the planet that has over 10,000 support agents around the globe. And so the interesting thing is our software and our infrastructure didn't really have to change. We just had to turn on more instances in our, dozen AWS, Azure data centers around the world. And now that we've sort of gone live with the largest technical services organization on the planet, we're kind of going back through the large enterprise customer list very diligently.
So then you'll have people obviously on both sides of this equation, but typically most people will double down on either enterprise or low, no touch kind of freemium based SMB side. It sounds like you are really trying to do more of the enterprise size, bigger team sizes.
Yeah. I mean, we have an online no touch offering at ScreenMeet.com, but it's much more interesting to go into the large enterprises and rip and replace 15-year-old software with ScreenMeet because, one, it really drives compelling value, millions of dollars of savings on day one. And 2, we go in with some of the largest CRM platform providers in the world as part of a full suite solution.
Yeah. No, I get. By the way, I totally get the product. You don't have to convince me on that. It makes perfect sense. I just want to understand the kind of economics and how you've gotten the customers you've gotten. So, because we can't talk about every cohort, I mean, is it fair to say maybe the average team signing up with you guys is what, 100 people or something like that?
From a support agent perspective, 100, 50 seats and up.
Okay, 50. Okay, fair enough. So then, can I take the 50 times 20? The average folks are signing up 50 seats at $20 a seat.
A little higher than that.
Higher seat or higher
figure the
per
average
seat?
deal size. figure average deal, like under 25 grand is kind of not that interesting at this stage of the company. We're not going to walk away from it. I mean, if that's where you're going.
Yeah. No, what I'm trying to do is basically get out of talking about per seat and talk more about what kinds of companies you're targeting, which would basically manifest itself in ACVs or number of seats per company. What you're saying is we want to have companies that are signing up at least 100 seats at $20 a month, which puts you north of a $25,000 ACV.
Yeah. Yeah, that's right. That's right. And so you sort of build the hiring plan and the revenue and the financial model and, sort of the go-to-market marketing stuff around those metrics versus let's sign up 10,000 customers.
That's right. What's the backstory here? When did you launch the company? What year?
Yeah, sure. The company got started in 2014. We incorporated in 2015. I had previously sold a company into GoToMeeting, which most people, it's pretty logical. There was a product called GoToMyPC and another product called GoToAssist. And so, it was literally, I was the entrepreneur they brought in. I was a GM, ran a division, 100 people, $25 million P&L. I started looking around and said, yeah, this is SaaS, but it's not really SaaS. It's not really cloud native. And in the 15 years since you started this company, this thing called the cloud has sort of grown up. And so we need to re-platform all this stuff as cloud native. And I went to my boss, who was the GM of the $500 million division. And he said, yeah, you go do that. I don't have $5 million in 3 years to, do a science project. Mm-hmm. So that was the backstory. It's sort of the incremental innovation of re-platforming a $1 billion a year business in the cloud. The cloud version is going to win.
Yeah, totally. By the way, Eric did this, right? He did the basically almost same story, and the guys didn't want to let him build it internally, so he said, "Fine, I'm going to leave and launch Zoom." And basically now Zoom is, cannibalizing his other product he sold into that company previously. So
yeah, and I know Eric. Eric and I, because I was the audio layer for GoToMeeting. That was the company that they bought, and so we talked. I said, "Go for it, man." Like having spent 10 years, getting punched in the face by 10 millisecond packet drops. I don't want to do audio or video anymore.
Yeah.
So I'm going to do the screen sharing part.
Yeah. Okay. Talk to me about what you've scaled to today in terms of team size. How many folks?
Yeah, no. So the other thing that's very interesting, if you're going after large enterprise deals and you're a SaaS company, is you almost have perfect economics. So we're under 20 people.
Why do you say that like it's a negative? I have nothing wrong with small teams.
No. My point is it's a positive. But
yeah, I have nothing wrong with that. Wait, so less than, you're talking about like 10, 11, how many people actually?
15-ish.
That's great. So what's the sales motion look like on those? Do you have any like SDRs, AEs, CS folks yet or no?
No. And we have one technical account manager.
Okay.
But it's me and my COO. Between the two of us, we have 50 years of running enterprise software companies.
Who's doing sales? Are you both doing sales?
Yeah, we're both doing sales. And what we do is we go in with the large platform companies, Salesforce, ServiceNow, Microsoft Dynamics, and sit there with the executives and say, this is an executive level, this is a platform decision. Now that you've made the platform decision, what's the application to solve this use case? It's not buying a box and putting it in your data center. That's what one vendor will do. It's not buying desktop software. It's buying the cloud version of the tool.
Yeah.
So
no, again, I get Ben, I totally get the product. I'm sold on it.
But my point is the selling motion is also not sort of a quick and dirt. You're still sort of selling at the conceptual level. You're not quite selling the swipe your credit card and you're done kind of at those enterprise.
Oh God,
levels.
You anything above $5,000 a year, you're not having a no touch swipe your credit card on a website deal. But all those companies typically have still sales motions built out around SDRs per AE and then customer success reps per AE to support onboarding. I'm just wondering if you have that system built out yet.
Yeah, well, we don't, and we're not entirely convinced that we need even to scale. We can probably get there without having a big overhead. Sales kind of expense.
Yeah. Are you bootstrapped today or have you decided to raise capital?
We've raised capital, but we haven't taken any institutional money.
Okay.
So I mean, kind of done after 25 years, you sort of know the venture community, and basically to a person, they've said, we'll give you money privately, but don't take money from our fund because we're just going to distort what you have to do.
So how much into the company today? You're talking like 200, 300 grand?
No, like closer to $5 million.
Oh, okay. But all from kind of more like angels versus traditional.
Friends and family, because look, I don't know how fast this market's going to move. And I don't want to have to bet my sweat equity that's going to happen sooner, but it's going to happen. And we're the number one, we are the disruptor in the market. So it's all like, we'll get a look at every deal.
So you've been at this since 2014. Over the past 5 years, what have you scaled to in terms of just total customers you're now serving?
Well, I think the more interesting question is how many support agents use ScreenMeet today?
No, I actually specifically don't want to know that answer because that is a per seat thing. I'm trying to actually understand how many companies have adopted you, just at a company level.
Under 100.
Okay, under 100. Okay, and now feel free to share the number you like, which are number of those agents that have adopted you.
Oh, I mean, tens of thousands.
Okay, got it. So tens of thousands across 100 companies. I mean, you're looking at team sizes that on average north of 1,000.
Well, there are a couple pretty big ones there. But the interesting thing is you look at how many Salesforce Service Cloud seats are out there, how many ServiceNow CSM or ITSM seats have been deployed, and you sort of do the attach rate. It should be 1 for 1 or, 2, right? So the addressable market for us is millions of seats deployed, and we're still in the tens of thousands.
Yeah, but across right now, less than 100 customers.
That's right.
Okay, fair enough. And then you said earlier, kind of average ACVs were, call it 24-ish range. That would put your MRR right now at somewhere around 200 grand a month. Is that generally accurate?
We don't disclose that, but you're in the ballpark.
Yeah. By the way, I don't want to disclose things you don't feel comfortable disclosing, but I'm just taking two numbers and multiplying, which was your average ACV times your customer count.
Yeah. No, I get it.
Yeah. Cool. What about growth? So if you're out around that area today, where were you about a year ago?
Much significantly lower.
Like tripling year over year, doubling year over year?
Yeah, at least.
At least doubling or at least tripling or at least quadrupling?
I mean, look, we sort of crossed the chasm over the last 12 months.
Yeah, Ben, these are all very generic terms. People define chasm their own way. Jeffrey Moore defines it one way for different companies.
Yeah, well, again, we don't disclose that stuff. So.
Okay, that's fine. Again, just to be clear, though, I'm taking numbers you've already given me, right? So if any of those numbers you want to change or update, definitely do that so that they're accurate.
Yeah, no, you're okay. We're good.
Okay. What, and I mean, when you raise, even if it is from angels at a 5 million, you've put yourself on a track basically saying we're not going to be bootstrapped, which means there's generally a kind of a flow you have to go at, which is, 2 or 3x the first couple of years. And then obviously 2 or 1x even after that is fine. So, I mean, this year, what are you hoping to grow at? Are you targeting like a 2x or 3x or more?
I mean, again, we don't manage the market. We can't sort of forecast that demand.
Well, you just said that you're the number one player in the market. So how can you say that but not?
We are the number one. We are the only cloud replacement for the desktop incumbents. So at what rate do people switch off of their long in the tooth renewal solution and move to the cloud platform? I can't forecast.
Well, you have 5 years of cohort data, so you should have at least a prediction. That's all I'm asking for is what's your prediction in terms of what that switch rate looks like over the next 12 months?
It's going to accelerate. I mean, I can tell you that. Right?
What has it historically been?
Very, very incremental, tiny. I
mean, can you measure?
I mean, think of it, 50 companies over 4 years. So that's 10 customers a year, right? Will it be 25 to 50 customers over the next 12 months? Probably.
Okay, got it. So 50 customers today that you've landed over the past 4 years.
That's right.
Okay, got it. Where's most of the growth coming from? So how are people finding you, like that switch, that kind of motion of switching you just articulated? Are you guys doing kind of ABM stuff? Or are they finding you naturally? What's that look like?
Yeah, no, it's really going in through existing channels like the CRM platform providers and being the cloud-based replacement for the desktop solution.
Mm-hmm.
So as they sort of say, okay, now that I have this CRM platform in the cloud, what are the key features that are missing?
And are you paying those folks? Are you paying those folks a kickback, or is that just organic ranking in like the Salesforce App Exchange, for example?
Salesforce takes a piece of every deal that they refer.
Is that your number one referrer?
No, but also like that's kind of stuff we don't really disclose.
Okay, I'm simply asking if you're following a model, a reseller model, is that something that your margin?
It's not a reseller model. It is a sort of channel distribution model.
Great. And so let's not talk specifically about any one thing, but in generally speaking, under that model, you're going to take a hit to your margin immediately because you got to pay for that lead from the marketplace.
You're either going to pay the channel.
My question is just simply, what is that typically? Are we talking 10%, 40%, or something less?
The average app exchange commission rate's about 20%.
Perfect. Super valuable. Yeah, I didn't know that.
Yeah. So, but again, just to level up, you either pay the channel or you pay your own sales team, but it all works out to be about the same. The channel is less risky because you don't have to hire the sales guy, get them up to speed, and then see if they perform.
Well, but the Salesforce doesn't close your deal. You still have to put you just have to put touch on it after they drive you the lead.
Totally. Yeah. And the app exchange is not a lead gen place. For any SaaS entrepreneur out there, don't think you're going to put an app in the app exchange and people are going to beat down your door.
Yeah.
You then really have to market around it.
We're running out of time here, but quickly, churn's critical in any SaaS company. So how do you look at your churn and how do you make sure you're always driving that to a more healthy place than it is today?
Yeah. Well, we have negative churn and we do it through just, outstanding customer satisfaction.
So what does expansion look like typically on a customer that signs up a year ago? Are you talking like 40% fixed, 80% less?
No, less, probably, single double digits, 10-ish%.
Okay. Well, that's still, 10% expansion is still pretty good. And it sounds like that's more than, go ahead.
If they onboard additional teams, it then grows higher.
Well, you'd include that in whatever the expansion is. That's what expansion revenue is. So you're saying total expansion revenue on account is typically 10% from year 1 to year 2?
Yeah, I think that's fair.
And then the same over that same period of time, that same cohort, gross churn is about what?
Gross churn. I'm just trying to do the math in my head. Probably single digits.
Yeah. So less than 5%.
Yeah, so it's still net positive.
Yeah. And that's less than 5% annually, correct?
Correct.
Yeah. So you're saying net negative revenue churn, which is fine. It's the same as saying net revenue retention of north of 100% because your 10% expansion more than makes up your 5% churn.
Yeah, right. We generally don't lose customers, and the ones we do are replaced by more seats at the ones.
You're still investing though pretty heavily in growth, right? You raised capital. You're cash flow negative at this point, right?
We're getting to break even.
Yeah. You think that'll happen this year?
Yeah.
And you'll raise, you think, when that happens or no?
Yeah. Look, what I've learned doing this is you've got these windows to gain market share. And if you can raise money, while there's still money to be had, you might as well go and gain market share because then you can manage the cash flow just off revenue, right? Especially if you're not constantly feeding new sales hires.
Yep. Nope. Makes a lot of sense. Very good. Let's wrap up here, Ben, with the famous 5. Number 1, what's your favorite business book?
Crossing the Chasm.
Number 2, is there a CEO you're following or studying?
No.
Number 3, what is your favorite online tool for building your business besides your own?
My favorite, Gmail.
Number 4, how many hours of sleep do you get every night?
6 to 8.
Okay. And what's your situation? Married, single, kiddos?
Married and first child due in 4 weeks.
Oh, so wow. I'm glad we got the interview.
Yeah.
That's exciting. And how old are you?
46.
Last question. What do you wish your 20-year-old self knew?
Trust your intuition more.
Guys, trust your intuition more. Coming from ScreenMeet, 50 customers paying north of $25,000 in terms of ACV. Again, helping people transition to a cloud solution for their remote support teams, especially the ones located in call centers. Right now has about 15 people on the team, 5% gross churn, 10% expansion, 105% net revenue retention. They're still burning a bit, but they have cash flow positive insight. Hopefully this year, $5 million raised, launched in 2014 as they look to scale. Ben, thank you for taking us to the top.
Great. Thank you, Nathan. I appreciate it.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it, and the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.